Stocks close mildly higher on Wall Street as key indices post gains ahead of the release of key inflation data tomorrow. Asian markets open largely lower as investors brace for measures from the Bank of Japan after the yen dips to near 38-year low. The GIFT Nifty is also suggesting a lower start for the Indian market. Brent crude continues to trade around $85 a barrel. Gold prices slipped to a two-week low on a stronger dollar and rising treasury yields. Cryptocurrencies give up gains. Bitcoin falls back to near $60,000 after a rebound yesterday. In key stocks to track today, RBL Bank and AU Small Finance Bank will consider fundraising in their board meets today, while Raymond shareholder will meet to decide on the reappointment of Gautam Singhania to the board of the company amid the ongoing divorce dispute. Market regulator SEBI is likely to tighten rules for stocks to be eligible for derivatives trade in its board meet later this evening. The regulator may also ask brokers and mutual funds to stop marketing via unregistered influencers. Easing delisting norms is also on the agenda. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you today. A lot happening in the global markets as well. So first up, let's take a look at what the Asian markets are doing. The big news that we have received is that yen has fallen to a 38-year low, and that is something which is causing nervousness in the Asian markets today. The Taiwanese index down 165 points, the Hang Seng is down 1.2%, and especially if we look at the Nikkei, that's down around 1%. That's a 400-point cut that we're seeing on the Nikkei right now, and the street is watching out for any measures taken to reverse that fall that we have seen in the yen against the dollar right now. If we look at something like a Kospi, with that one is down 0.4%, Shanghai is down 0.4%, so it's a red-looking screen across the Asian markets. The GIFT Nifty, that'll come up for you on the screen because that'll indicate the moves for our own markets. It's a 60-point cut indicating that the start for our own markets could be well in the red today, and also it's the monthly options expiry, so there could be a lot of volatility in trade today. Talking about the big news, the Japanese yen has tumbled to a 38-year low against the US dollar, heightening the risk of intervention. Japan's Vice Minister of Finance and Currency Chief said they are watching the forex markets with a great degree of urgency and would take appropriate steps as needed. What should the Bank of Japan do next to contain this one-sided fall in the Japanese yen? Listen into what Bleakley Financial Group's Peter Bukwar had to say.
There's an extraordinary amount of pressure now on the Bank of Japan from not only the Japanese citizenry, from that is dealing with higher inflation and now a decrease in the purchasing power of the yen, but also the Ministry of Finance that doesn't want to have to deal with FX intervention because they know that usually fails. The question, though, is that even after those moves, is that going to be enough to stem this yen weakness? Because there's still a mile wide between U.S. policy rates and what will be in Japan. They've done it twice already over the past couple of months, and the impact was maybe a couple of days. And we're seeing now, obviously, the retest with 160, proving that those two times have failed. The only way to get a sustainable slowdown, at least in the depreciation of the yen, or maybe even get a rally, is actual action by the BOJ. So I'm not sure if they were going to intervene before that BOJ meeting and sort of front run it, but maybe in order to give any yen rally triggered by that meeting some momentum, maybe they intervene after that meeting, but in the meantime, having to wait for further weakness.
Okay, this is an important story to track. We'll keep getting you more updates on this one. But Wednesday was a positive day of trade on Wall Street. The Dow Jones gained about 16 points. The S&P was up about 9 points, while the tech-heavy Nasdaq closed 87 points higher. The two big stock movers of the day were FedEx and Amazon. FedEx posted its biggest one-day gain since 1986, while Amazon hit an all-time high and topped the $2 trillion market value mark. Investors will track the Fed's preferred inflation gauge, the personal consumption expenditure reading for the month of May. The dollar is hovering at levels of 106. The US Treasury yield is at 4.3%. And Citi raised their year-end target for the S&P 500 to 5,700. Citi's US equity strategist Scott Cronert discusses what could be the key risk for the US market this year and the outlook at large. Listen in.
Well, we got election coming up, and so the platforms for each candidate is going to be, visible, particularly beginning this week. I think what we're probably most focused on, apart from some fraying around the edges from an economic perspective, is that what's happened with implied growth expectations. Okay, so what we like to look at is not so much the valuation, but the growth that's implied in the valuation. As you've lifted the index higher, what you've done is begun to set a very, very high bar for what companies need to deliver, beginning with the Q2 reporting period. So essentially what all this sets up for, from our perspective, is that we have to be prepared for a pullback as we go through the summer months into the fall, and then set up, we think, for a better opportunity into the end of the year.
And the U.S. Federal Reserve has given all of the U.S. biggest banks the passing grade in its annual stress test, saying they all have sufficient capital buffers to absorb losses and also withstand a severe global recession. CNBC's Leslie Picker has all the details.
The Fed's 2024 test led to a projected hypothetical loss of $685 billion in aggregate, and the CET1 capital ratio, that's the cushion against losses, was projected to decline by 2.8 percentage points to a minimum of 9.9%. That's a higher absolute level and a deeper decline than last year, even though the test was fairly similar to the one conducted in 2023. Senior Fed officials believe the aggregate stress capital buffers, which determine how much more capital banks need to hold as a result of these tests, should go up modestly. The Fed says the larger decline is due to increases in credit card balances and higher delinquency rates, corporate credit portfolios that have become riskier, and higher expenses and lower fee income. According to senior Fed officials, losses from commercial real estate were similar to last year, so they're not really driving the bigger decline. Those three risks, though, suggest, quote, required capital buffers should be larger, Vice Chair Michael Barr said in the statement. He added, quote, while banks are well positioned to withstand the specific hypothetical recession we tested them against, the stress test also confirmed that there are some areas to watch. That CET1 ratio saw some dispersion among the six largest banks under the severe adverse scenario. JP Morgan maintained the highest levels at 12.5%, while Wells Fargo had the lowest at 8.1%. This year's test also included a so-called exploratory analysis, which tested for rapid repricing of deposits in a severe global recession, as well as trading book stresses comprising the failure of 5 large hedge funds. The Fed found banks were able to withstand these tests as well. Banks can start announcing their capital return plans after the market closes tomorrow. For CNBC Business News, I'm Leslie Picker.
Okay, all right, that's the global market action and opinion. But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. What's the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. You know, what you have to look at is it's actually quite a mixed outlook as far as our own markets are concerned. Remember, we are perched quite pretty, as far as our own markets are concerned. All of the key indices have yesterday hit fresh lifetime highs. Now, talking about how the overnight cues have been. Overnight cues, especially from the US markets, have been quite supportive. A flat to positive close for all of the US indices. Now, when you're talking about oil prices, that was something that was a bit surprising. Now, despite quite a few negative news flow coming in, actually what we saw was that oil prices saw a move higher in yesterday's trading session. WTI futures now hovering around the $81 a barrel mark. Brent futures closer to the $85 a barrel mark. Now, look at the Indian markets. The outperformance has been quite significant. Yesterday, record high levels, Reliance Industries led the charge as far as the main frontline indices were concerned. Along with that, the sensex and the NIFTY Bank too yesterday hit fresh record highs. What are the other set of stocks that did quite well? Yesterday, the entire telecom pack, spectrum auctions are going on. Along with that, hopes of a tariff hike, and along with that, the entire cement pack, especially in terms of consolidation that is being seen. There is hopes that a lot of other players too would get consolidated and acquired by larger players. On the back of that, both of these two particular sectors did quite well. Overall breadth, however, remained muted in the broader markets in favor of the declines. Now, talking about our the overnight cues and morning cues, when you're talking about Asian markets are quite muted. Japanese yen is actually trading at a fresh 38 versus the dollar, and GIFT Nifty is indicating a gap down start. Cues for today, F&O expiry, and along with that, there will be some passive flows coming in on account of NSE index adjustments that will happen in today's trading session.
Okay, all right. So we'll be watching out for that. Thank you so much, Vivek, for joining us. Let's go across to Abhishek Kothari. He will start the stocks to watch out for in today's trading session.
Well, to begin with, KC International, they have got orders worth 1,025 crores in T&D and cable business. JSW Energy, their arm JSW Neo Energy has signed PPAs for 1,325 megawatt of renewable energy. In terms of spectrum, Bharti Airtel has acquired 97 MHz in 900 MHz, 1800 MHz, as well as 21 MHz at frequency bands for about 6,875 crores. Bharti Hexacom, they have acquired, rights for 1,001 crore. Reliance Jio has acquired 14.4 megahertz for about 973 crores, while Vodafone Idea has acquired 30 megahertz for 3,510 crores. Watch out for some blocks in trade today. Sources tell that FIH Mauritius will sell about 9.7% stake in CSB Bank for a consideration of close to 595 crores. Post this stake sale, they will have 40% in the bank. India Resurgence Funds as well as Piramal Natural Resources, they will sell about 10.1% stake in Archeon Chemicals for a consideration of close to 819 crores. There are few board meets happening, so for consideration of fundraise, RBL Bank and AU Small Finance Bank will take board approval today. Raymond, they will decide on reappointment of Gautam Singhania on board today. Dr. Reddy's, their arm in Switzerland, has signed agreement with Helion PLC and its associate companies. Adani Ports, their outlook has been upgraded to positive from stable by S&P, while the rating has been reaffirmed at BBB-. India Cement, it will be excluded from F&O segment from August series. PI Industries will acquire Plant Healthcare for a consideration of 32.8 million pounds. Back to you.
Okay, all right. With that, let's move on. Let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So, June series expiry today, and what a series it has been for the bulls. Nearly 1,400 points on the Nifty, 1,380 to be precise so far. And that makes it on track for the best series in this calendar year itself. Because the last time we saw a move bigger than that, it was in December series, where there was a move of nearly 8.2% or 1,650 points on the Nifty itself. The story of this series has been the FIs starting on the short side and then constantly adding longs and covering their short position. So yesterday as well, 2,800 crores, nearly 2,900 crores worth net purchase in index futures, 22,000 long contract additions, 39,000 short contracts which were covered, and as a result of which, this picture comes up for you, and that will tell you the story of the series. When we started the series, the FII long exposure was just 13%, and the net exposure was close to 3 lakh shares on the short side. So that's, the graphic plate that should come up for you. And now as we speak, the long exposure is 67% and the net exposure is 2 lakh contracts on the long side. So what does this mean? 5 lakh contracts have been added on the long side in this series itself, and long exposure jumping from 13% to 67% itself. The question is, where do we go here from here now? Everyone will be eyeing the rotund number of 24,000. A lot of punt buying has taken place out there. That happens if we cross the 23,950 mark in today's trading session. But for that, we'll have to navigate through choppy sessions as, the GIFT Nifty indicates. The first leg of support would be the 23,750 mark because the 23,800 put has seen a fair amount of writing. What is important to track today would be HDFC Bank, because if you look at both the Nifty Bank as well as HDFC Bank, yesterday the Nifty Bank fell off highs. The HDFC Bank also ended a little lower. So does this momentum continue in July series? We have big triggers there like the Union Budget, Q1 FY25 updates and results, and the monsoon spread. For today, 2 stocks I'm watching out for. One, India Cements will be excluded from F&O trade from August, but also enters F&O ban, as we pointed out yesterday. And for Z, it is the last day of F&O trading. So what happens to these outstanding contracts which are there already is something we'll track.
Okay, very interesting. So this is what today will look like, and it is the expiry as well, as Manglam mentioned. There will be a lot of volatility that we'll see. Thank you guys for joining us and preparing us for this trading day ahead. Let's slip into a break. Up next, we'll get you important commentary from 2 managements, L&T and Tata Motors. Stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC TV18. Market regulator SEBI will hold its board meet later today and is likely to tighten rules for stocks to be eligible for derivatives trading and ask brokers and mutual funds to stop enlisting unregistered financial influencers for their marketing campaigns. The board will also consider changes to delisting rules to make it easier for companies to exit from stock exchanges. We'll keep getting you more updates on the outcome, but let's get you some important corporate developments. S.N. Subramanian will take over the role of chairman for both of L&T's group's listed companies, LTI Mindtree and L&T Tech Services, after A.M. Naik stepped down. Speaking to CNBC TV18, the newly appointed chairman said he sees positive signs from the companies this quarter and they will continue to grow with the right leadership.
There are green shoots, there are positive signals. I'm sure it will reflect on the results. That's the way one should see it. The way our IT companies are doing, 10 to 12% growth, one of the best performing mid-tier companies, now they're majors also. As we just mentioned, the 5th largest in market cap and 6th largest by revenue, and we continue to grow. Right. Both the companies have the right leadership and the right kind of atmosphere to grow. They're well recognized by the clients. We started some new business like L&T Green and L&T Semiconductors, so spending a lot of time on that. We are more in the design aspect of it. If the design does well, tomorrow we may look at contract manufacturing, but we are not going to invest in a foundry or an OSAT or such as a facility. That is not in the cards. So we are more on the intellectual part of it, that is the architecture, the concept, the design. And tomorrow, if some client wants us to assist them in contract manufacturing, we'll look at it seriously. But very clearly, we're not entering into any investment in foundries or OSAT or anything like that. No.
Okay, that's the word coming in from L&T. Tata Motors also held its 79th annual general meeting yesterday. In conversation with CNBC TV18, Shailesh Chandra, the managing director of passenger vehicles and electric mobility, spoke about the comprehensive game plan and his expectations from the passenger vehicles industry. Listen in.
I think the competition is going to be really good for the EV industry because there will be a lot of buzz in the market about electric vehicles. There will be combined marketing spend. We have expanded our reach to multiple places, not only in terms of our sales outlet but also service. This year we are going to launch Curve EV as well as Harrier EV, and subsequently you'll have Sierra EV and many other products which are going to come. So I think we have a very comprehensive plan. Financial year 22 and 23 were very strong growth, double-digit growth for the industry. We saw moderation in the financial year FY24, where it came down to roughly 8.5%. Typically, the secular growth rate for PV industry is in between 6 to 7%. We believe that this year, because of the last 3 years of very strong growth, there will be a moderation this year. This can be therefore anywhere between 3 to 5% growth rate. That's how I see PV industry. It will be more skewed towards the H2. H1 will be slightly more challenging as compared to H2. Post monsoon things should be better, and post the festive season. So that's how I see the industry.
And Girish Wagh, the executive director of Tata Motors, also spoke about the capex plans in industry growth and the expectations from the union budget.
In Tata Motors commercial vehicle business, we have given a guidance of around 2 to 4% of the revenue will be our capital expenditure. Over the years, the amount that we have been spending on advanced technologies addressing the mega trends of autonomous, connected, electrification, software, digital has been consistently increasing. And I think in fact this year more than 40% of our capital expenditure will actually go on these technologies and developing our products and services in alignment with these trends. Vehicles is concerned, the government's push on the infrastructure has been very, very beneficial. So we expect the government to continue that, and that's the stated intent also. Secondly, I think the government has also been very supportive on electrification with both demand and supply side incentives, whether it is FAME, PLI, GST. So we expect those also to continue.
And CFO PB Balaji spoke about how the company was planning to reach and maintain a 15% EBIT margin in the Jaguar Land Rover business.
The most pivotal one is the strategy that we are following, because that business is pivoting away from what it used to be to a premium luxury position. a premium luxury OEM by design needs to be a 15% plus kind of an EBIT margin. So therefore, that is the starting point of the conversation. To do so, the key ones that we need to get right will be the portfolio. Then, of course, our engagement with the customers so that we're able to give that discerning clientele extremely curated experiences similar to what we did with the Range Rover house, for instance. And at the same time, we also need to ensure product quality picks up so that we are able to meet those aspirational needs. So that is a combination of factors out there.
Okay, that's the word coming in from the top leadership from Tata Motors. We'll step into a break now. When we come back, we'll talk about all the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, let's get in Manisha Gupta. She's joining us with all the update from the commodity space. Good morning, Manisha. Some more declines.
Oh, yes, absolutely. Across board, that is. I'll start with the gold and silver prices because we've seen further declines onto this one. Both of these metals are closing June on a negative note. So we've seen gold prices slip below $2,300 an ounce. The all-time high has been $2,450, so sharply down from those kind of levels. Silver is also trading below $29 an ounce, which is a 6-week close for this one. There have been hawkish remarks from the Fed officials. That seems to be weighing onto the markets. The strength in US dollar is yet another reason. And when you look at the base metal prices, well, we have copper trading at a 2-month lows. Here as well, it is a strength in US dollars, weak PMI data, increase in near-term inventories. That is what is weighing on copper. That's what's led to aluminum prices going to a 2-month lows. And zinc is also declined because the China imports for zinc concentrate has seen a 24% decline between the month of Jan and April. It's a decline also coming in for the crude oil prices, still holding positive though for the month of June, but the very strong rise in U.S. inventories by 3.6 million barrels is weighing onto the space as well. So in Asia right now, almost all commodities trading in the negative.
Okay, all right, Asian markets in the red and so are the commodities. Thank you so much, Manisha, for joining us as always and giving us an update on what's happening in the commodity space. Moving on to some national news now, a BJP minister has fueled speculation on a possible ban on liquor in Odisha, claiming that the CM Mohan Manji-led government is working towards making the state liquor-free. Nityanand Gond, the Odisha Social Security and Empowerment of Persons with Disabilities Minister, said that the state cannot encourage liquor sales fearing revenue loss. Contradicting the minister's statement, the Excise Department said that the government has no plans to ban liquor in the state. Remember, Odisha enacted the Orissa Prohibition Act in 1956, which was given assent by the President of India on January 19, 1957. However, the act is yet to be notified and enforced. And in a major global development, following days of violence and political unrest, the President of Kenya, William Ruto, has withdrawn the finance bill that drew much controversy. Last evening, the President said he would not sign into law the finance bill that proposed new taxes to pay off public debt. This did not sit well with several citizens, as many said the law would simply cause more economic pain. The bill led to protests in the country that soon turned deadly, killing at least 23 people. All right, with that, it's curtains down on this edition of Power Breakfast. But stay tuned, Bazaar Morning Call comes up next.